Hey everyone, it's Michael Baltos, and welcome to the Orderflows market analysis for Monday, May 22nd, 2017. Now, it was an interesting day, big up day again in the S&P. So, we're coming back on a lot of, the loss that we had on Wednesday. Now, again, I'm recording this. It's about just before 9 p.m. on Monday night. There was the bombing in Manchester rather, at the Ariana Grande concert, and in case you're wondering what the market did off that, it sold off, but not much. I mean, it's a sad state that we're in when you got a bomb goes off in a major city. The Manchester Arena in Manchester is the largest indoor arena in Europe, and S&Ps, before it went, before reports started coming in, we were trading in the 90s, low, high 89s, and we sold off down to, 2086 and 3/4, and that's not much of a reaction. If you're looking at the bonds, usually you'd get, some sort of bombing, you'd see a flight to quality generally, and you're not seeing, pretty much anything happen. And the markets aren't really reacting. That's a sad state that we're in nowadays. I hate to say it, but these these events, these bombings are becoming like part of life. You just got to accept it. That's scary. That's scary. Honestly, if this was 10 years ago, 15 years ago, and something like this happened, you'd see the market down 10 points. You'd see bonds rallying, a full bond point. But now you're not seeing pretty much anything. We got a little bit more action in the overnight session than you did all day in the main session in the bonds. I mean, bonds were doing nothing yesterday. I mean, literally nothing. You got your normal distribution day there. I mean, even when I say that, it's extremely small, very tight range, very light volume. But it's just a very quiet day in the bond market yesterday. But before I jump in, I should really go through the brief disclaimer. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, again, I say this, I put this disclaimer up there because, partly the reason I put that up there is because I want to deter people that thinking, trading is easy. Trading is hard work. And, there are a lot of people that thinking, I'm going to learn day trading like you could just pick up a book, that you buy at the bookstore for $19 and you become an expert trader. No, of course not. Just as, you can't just pick up a book on medicine and all of a sudden, start curing people or performing surgeries. Of course not. It just doesn't happen. But anyway, now that I got that through, and hopefully I've dissuaded a few people that aren't really serious about trading, let's go in. There's some very interesting things in the market. We'll start with the British pound. This morning, excuse me, so got this damn cough. Next week, I don't know if I'll be doing these recordings. It's Memorial Day weekend coming up, and I do have some plans. I'm overseas, though, but I still have plans, even though it's Memorial Day. It's the British pound this morning. Let's look at 7. People say, well, you're starting at 7 because you had some losing trades. No, I did a nice ratio here with the point of control at the swing high and the delta scalper giving a nice sell. It was a nice move. You went from the 130.20 area down to 130 even. Price rejector is giving you a buy here. You do rally back up, but I'm more interested in this high. You get up here near the high of the day, and you have a couple things. One, at this high, you have the delta scalper kicking in. You have the price rejector also giving a sell. You don't have a ratio. You're 2 ticks off the high. This is a rare case where the delta surge came before the delta scalper. This is delta surge, this is delta scalper. Usually it's the other way around, but in this case it's right up here. And you sell off again from the 30, this bar here actually in the 24s down to, down to 10, that area. You do have the delta scalper giving you a buy here. Now again, when I say, you have this delta scalper, really all it does is it reads the delta. I don't want to get into the analysis of the delta every single time delta is giving me a sign with the delta scalper. That's why I created the delta scalper, to basically take that effort off of me, that analysis off of me, and just sort of free up my brain for other things. Because when you're looking at chart, an order flow chart, or any type of chart for that matter, there's a lot of stuff going on, right? And sometimes you're looking at one market and something's happening in another market, and you're not quick to pick it up because it may take you 15 seconds to do the analysis, but you're sort of focused on one market. Maybe you got a position on there and that one requires more of your attention, but out of the corner of your eye on another monitor, you start seeing something flash, the delta scalper, or the delta surge, or any of these other delta tools or order flow tools. It just gives you, it's like having a trading assistant. I don't know how else to describe it. It's like having someone do the analysis for you. In this case, it's the computer, right? It's just reading the delta, the order flow, and then take into account a few other things, and giving you that sign that, hey, you have a potential buy. You still got to pull the trigger as a trader. It doesn't take that away from you, but really what these are tools. I like to say, these are like the slap you upside the head dummy indicators. Like, hey, don't miss this. Because you do have, most day traders do monitor more than one market. Even I see these pictures of guys watching domes. They'll have 20 domes open up on there, but are they really watching 20 domes? No, of course not. They're concentrating on one, but they're constantly scanning, right? Now imagine if you had a tool that can highlight to you when something's happening in a different market. You don't have to twirl your head around looking at 20 different screens, or 20 different 20 different charts or domes. So anyway, we do rally. We go up from 130 even. We have the buy there. You get all the way up to into the 50s. Actually, you come off. There's nothing in the order flow other than the divergence up here. I would have liked to get the ratio up here because this would have been a nice sell to take, but it didn't show up. And then we just sort of drifted off into the close for from 10:30 all the way up until 3 o'clock in essentially a very tight range. I showed you the bonds. It was a very tight range in the bonds. I showed you that earlier. Now I'll show you the 5 years. 5 years, as well in a kind of tight range as well this morning. It's going from 7, this area here. You have the delta surge giving a buy here, but it's a very tight range. You get up to this high, it's a ratio. Sorry, it's a divergence. There's no ratio. You go sideways, you start getting some aligned POCs, start rallying up. You get another divergence up here. No ratio. This one's kind of close though. This one's closer. It's 0.85, I like 0.7. You do sell off, but a very uneventful day. And again, what's happening right now in the evening session, you can see we've gone up a bit. As news came out about the bombing in Manchester, but then you drifted back. Oh, okay. I don't know. I read reports that it was a suicide bomber and stuff, but it's at the point now. People, unfortunately, I don't want to say don't care, but are getting used to it, and that's scary. It's the world we live in nowadays. So anyway, let's look at the Japanese yen. You do have the delta scalper giving a buy there, but I could talk about it. There was one thing more interesting up here. Up here you got the high. You have a divergence. Okay, this divergence worked. For a naked divergence. Here you got the delta scalper giving the sell. So things are changing here up in at this high of the day with the delta, with selling taking over, and you're seeing a shift from buying to selling. You see all this move up here, all positive delta. Now all of a sudden you see this move lower, all negative delta. But really the sign that it was changing was up in here, right, with the delta scalper giving you that sign. Now you come down here, boom, boom, you get the trap traders sell, then immediately follows with the trap traders buy. That sucks. Sometimes it happens. I said, you can only trade what the market gives you, and then it's giving it to you right there. It's unfortunate that it was one right after the other. Usually it's not one right after the other. I said sometimes it doesn't happen. and then sometimes you get twice a day. Now, the other thing is, I have this filter for the the volume threshold on the imbalances set to 1. Actually, normally I have it kept at 50. Now, what difference does that make? Well, if I have it set at 50, this one will show up. This 1 against 50 will show up. This 5 against 22 won't show up. Now, is that important? Well, it is, because if you want to filter out not strong imbalances, I mean, is 5 against 22 strong? Yeah, maybe. I mean, you might consider it, but is 0 against 9? No. 2 against 10? No. 1 against 5 here? Not really. Those are not strong. But, in this case, in currencies, I like to see them all and then make my decision. 5 against 22? Yeah, it's borderline, honestly. 1 against 50? Definitely. But, like 1 against 5? No. 0 against 5? No. But, 1 against 7? No, of course not. But, I like to see them all on currencies. Now, if you said, if you had set it at 50, this one would not show up, and this one would, and it would look terrific. But again, I'm showing how it looks with everything, so people don't say, well, you're filtering it. Well, in this case, I'm not, and sometimes that's what you get. But even if you took this trade, you took the loss, you came right back, took the next trade, which is this one, you got everything back and then some. Then you get up here, you get the new high, you got the delta scalper giving a sell again, you got the divergence, okay, but no ratio. You do sell off a little bit. Come up here, make new highs. Now, this is what I'm talking about. You got the arrow there, but the imbalance is 1, so it's not inaccurate. You got very thin volume up there, and it's sort of giving you the sign. If I had the imbalance volume threshold set at 50 or above, this arrow definitely would not show, because it'd be, one of the requirements is the imbalance and the other stuff, but it's just not happening in there. I mean, it's appearing because I have the imbalance set at the lowest volume threshold. That's why it's taking all this stuff into account. And then 945, we do rally, we get up to new highs. Price rejector here, price rejector there. You don't have a divergence. You do have the U-turn giving you a sell there. You start coming down. You get a delta scalper buy, but it's on a red bar, so you're not interested in that. Here you have the trap traders again, and you get a nice little move up. Then you get here, you've gotten the delta scalper giving you the sell, and you see you just basically come off down into the lows of the day. You get this buy signal here, but you just go sideways. Now, S&Ps, the 10 range, even though S&Ps were up a lot today, 10 range honestly didn't really give much in terms of trading, what you want to call it, trading clues. It was kind of a tight range most of the morning, and cash open, we just sort of worked our way up, but we're putting in these bars with, this bar here, you put in 139,000 contracts, which is a lot for a 10 range chart. You started coming off on this high, you got the ratio down here, then you start rallying up, you're starting to see multiple buying imbalances, which on a 10 range bar, even though you don't have a stacked imbalance, if you've got multiple imbalances in that bar, it's still quite effective. I mean, you can see, here you got 2, here you got 2, here you got 2 on the way up, right, which is what you want to see. Here on the way down, you got 2, back on the way up, 3, and you go next bar up, another 3, you hit this high, you got a divergence. This was interesting. Again, this is a bar, you put in decent volume. Where am I here? I'm confused. On this bar here, you get negative delta 4,000, positive max delta 5,000. So you did get there. You had some very strong buying. Then it came in and changed, and it sold off a little bit, but then buying came right back. Very little selling in this bar. And this one, again, we put in some decent volume. Once you start getting up into above 80,000, it's usually considered already, for me at least, considered heavy volume for the bar. And each of these bars, it's taking quite a while for these to form. This bar took over an hour to form. This bar took almost an hour. This next bar took almost an hour. So it's it's easy to look back at the chart and say, oh yeah, we moved like this. But when you're sitting in a bar, not a alcoholic bar, but a price, a range bar, so to speak, and it's going nowhere for a long period of time, you're sort of in an area. I don't want to say consolidation or absorption, but you're in an area where people are happy to trade back and forth. And again, a new high, failed divergence. I'll say failed. It didn't fail till the night session open, and we sold off instead of and didn't get much of a. We did get a bounce, but again, we did have that the news from Manchester come out. But on the 4-range chart, again, today was a bit better day for the 4-range chart than the 10-range, and it's easy to look back after the fact. But as a trader, you should pick up, compare what's happening in the morning when you come in to sit down in front of your charts. What chart should I be looking at? Should I be looking at a 4-range? And to be honest, if you're coming in the morning at 7 o'clock and your range is 85.5 down to 78.25, you're in a very tight range. So you should really be considering looking at the 4-range chart. If things don't really pick up, if the market really starts to move fast, then you could go to the 10-range chart. But if a market's in a tight range, and for me 5-7 points is considered a limited range in the S&Ps when you're coming in by 8 in the morning, that it's going to be worth your while to look at a 4-range. So okay, here you have the low of the day. Okay, S&Ps 78.25. Now this happened at 4:40, just before 5 o'clock, and people will say, do you look at the night session? Yeah, you have to look at the night session, because lots of times that's where the highs or lows are made. And in this case, on this day, the lows were made here. You have the divergence, you have the ratio, and you rallied. Literally from your low, you didn't come back down here, at all. Look at that. That's the low there. So if you're not respecting these highs or lows for the day, you're really missing out. Or if you don't go back and I said for some people, I don't know why they don't want to consider what happened in the night session, but the 30% of the volume on CME happens between the reopen and 7 a.m. So that's a decent amount of volume that's traded. But anyway, you still got a lot of bullish signals down here. You got the ratio with the divergence. You got the delta scalper even giving you a buy there. And then you start working up, coming into the cash open here, making new highs right on the cash open. Where am I here? So failed divergence. One at 832, another one 841, another one 850. So if by now, again, I've talked about this. Failed divergences either on the way up is a sign the market can go higher. Failed divergences on the way down when they're grouped together. I'm not saying one happens at 6 in the morning, another one at 8 in the morning, another one at 12. No, when they're grouped together, this market's starting to move. 832, 841, 850. Every few minutes. Every 5-10 minutes you're making a new high, and you hit it, you come off again, and that's a sign that we can go higher here. Then 907 we hit that high, you come off. You got 3 in a row here, 1, 2, 3. You don't get the green bar in this one, but you get the pullback between these 2 point of controls, which is what you like. Where's your stop going to be? I normally get people asking, where's your stop on a 3 in a row? Well, look at this point of control here. Worst case scenario is above the first bar. You come back up. You don't get stopped out. You just go sideways, get a stack down and balance. You come off, and again, if you're getting short in here, this is around the 88.5 area. 89. I mean, you do trade down to 86.5. I mean, it depends on how you want to hold it. It goes down to 5.5. Then just sort of bounces around. Now you get 3 in a row. Again. Then you get the red bar. That's the, this is the delta scalper giving a sell. It didn't work out. Would have stopped you out. Get another delta scalper here, a sell. It didn't work out. You got the price rejector as well. Now, again, you got the 3 in a row. Get the pullback. You don't get the pullback between the 2 points of control that you like. But then you get the green bar, up, 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 make new highs. You got a ratio with the divergence. It didn't work out. It came right back with bullish divergence, bullish divergence. And then this is important. You got a stacked imbalance on a retest of a high, and that's important. we rally, make new highs. You get a ratio with the divergence. You sell off, come back up. Again, you're sort of testing these highs. You got point of control at the top of this bar, point of control at the top of this bar. So up here at least for now at 92 3/4, there's some volume. Even you can see it here. You test through it, you get through it again, you come off a little bit, and at some point you keep hitting that high, this area. This is not the high of the day, it's just below the high. So there's some volume, and if the market can get through that, we can go higher, and we do. We got a new high here, come off a little bit, going into the close. So there were some moves. There weren't the biggest moves to be had. Day traders, new traders, they all sort of come into these things, come into trading thinking, every day they're going to get 10-point trades, and you just don't. I mean, some days, you're happy to squeeze a couple drops out of the lemon for your lemonade, and I get these emails from people that run trading rooms. Oh, we had 20 points today. Oh, we had 10 points. And I look at the range and I see, there was a 12-point range on the day, and they're claiming they got 10 points. But that's why I think traders, new traders at least, just come into this market thinking that every day is going to be big movement days where they're going to get 10 points every single day. Sometimes you're not. Sometimes you'll get 2 points on a trade, a point here, a point and a half there. But ideally you'd like to add it up. Now it's not to say that those people, they're claiming to get 10 points out of a 12-point day didn't do that. But when I consistently see these emails saying, every single day, tell me how many points they got, I'm a little skeptical of it. But that's just me. I'm kind of a dick in that sense, but I'm a skeptical person. But like I said, that's myself. The euro currency. Okay, so this is where we are right now in the evening session. I mean, we did rally a little bit off of the news, but not by much. But from yesterday in the currencies, basically from 10, we went sideways. You can see here. I mean, you do have a delta scalper right there, but for the most part, since 10, pretty tight range, 10-point range. But if you go back, again, this was interesting. The high of the day. Okay, well, your first high of the day, you had the ratio with the divergence, and you didn't sell off. You sold off 2 ticks, and then you rallied right back and stopped you out. Then you got up to this new high divergence, but then you got the delta scalper. So again, it's signaling you in the delta that something's afoot. That the market can be changing. And then you see lower point of control. Well, these for me are all intents and purposes equal. These two are equal, and we sell off. Okay, but again, really up here looking for a sign to be getting short. I mean, you had a sign earlier, it didn't work out. Maybe you had price rejector. Honestly, I would say the prices were rejected there, but sometimes the market is still looking for its high, and you get it a couple bars later up here, and you get the sign up there. Now again, here you had a delta scalper sell, but it's on a green bar. So again, I'm not interested in taking it. People, I just want to show you guys that, so you don't think I'm trying to cover it up. Okay, sorry, I just had a cough right there. Okay, so last one I'll talk about. Well, beans. I don't think anything happened in the beans that much today. Not really. I'll talk about crude next. Actually, crude's the one I want to talk about. But beans, I remember not much going on today. So, where are we? Let me reopen here. 8:30. You rallied up to the highs. You hit the high. You don't have a divergence. You have a ratio bounds low there, indicating stopping volume. And you can see 700 contracts traded there. It's much more than the first time you traded, 777. You don't really ever come back up there. Excuse me, you hit, I'll say a swing high here, but here you got the delta scalper giving a sell, and you did sell off a few cents. Excuse me. Going into this close here at 950. Well, close here at 958, but I was really looking at the close to be happening somewhere around in here. We did get this last bump up in the last few moments of trade. But crude oil, really quick. Excuse me. Just when I think I'm getting past this cold, it keeps coming back. Thought I got past it, then my kids started getting it, and they passed it back to me. I got it from them, and they gave it back. But anyway, so crude oil. Okay, let's go here from around 6 in the morning. Delta scalper, give a sell here. Okay, Delta surge giving you this buy here. I should open this up so you can see how it looks. Get up here to this high, nothing in the order flow really. Here you have a divergence. Okay, again, I'm not convinced just because you got a divergence. But here you got the transition, that's this yellow one, and you got the Delta scalper also giving a sell, and you sell off, boom, and it gets quite aggressive here. So you're selling, you're basically getting short. You go sideways for the next couple of bars, 51.30, 51.32. You trade all the way down, new lows, 87. So from 30 down into the 90s, you could have had that trade quick 40 cents. You get a ratio with the divergence on the low. Again, that's the signature bread and butter trade that I look for. Next bar, if you're getting long, in the 94, 95, 96 area, it trades all the way up into the teens before it starts coming back down again. But again, the first sign, okay, people ask, well, how do I trail my stop? Is watch the points of controls. Once you stop having higher points of controls, it's usually a sign that the market could start turning on you. So you got point of control here with the bar where you're getting long. Next bar is higher than this bar. Next bar is higher. All of a sudden you get up here and it's changing, right? All of a sudden it's below and you got a red bar. That's not a good sign, okay? So, if you're long in here at 97, 95, 96, 97, you get up here, this is a bearish sign. You should be thinking about cutting it out once you get down here to, 06, 07. There's no crime for cutting it short. What would you rather do? Get out here with a small profit at, 02 or 04, 05, rather than coming back down to where you got into the trade and then get out at nothing? People say, well, it can go up, it could bounce and go back up, but if you're starting to see negative signs in the order flow, negative signs against your trade, then, you get out. Here's the Delta surge giving a sell. Again, it's right into the low, which I'm not a big fan of taking those types of trades. Get up here to the swing high. You do have a ratio bounce low. You go from a ratio bounce low to a ratio bounce low. You do rally up here. Get down. Then here you got the price Delta scalper giving a sell here, and you just sort of go sideways for the next. This is what time? 11:15. You go sideways. Again, if you're looking at this trade and you're in it here and it's an hour later, and it's still basically done nothing, that's your sign to get out. Don't stay in a trade that's going nowhere. Okay, and you just sort of go nowhere. And right now in the night session, 9:15, this is where we're trading. Okay, so thanks for watching this video. To learn more about trading software used in this presentation and how you can profit from order flow trading, visit my website, orderflows.com. And I put a link in below about the order flows inner circle, where you get the indicators such as the price rejector, the Delta scalper, the transition, the U-turn, and a few others as part of the inner circle. So if you're interested in seeing a lot of these indicators on your own screen, click on that link and learn more about it. So thanks everyone. Bye bye.